Okay, let's unpack this. Today, we're diving into a stack of sources that, well, they might look a bit like a study guide, maybe.
Yeah, a bit dry on the surface, perhaps.
Right, but trust us, it's actually a goldmine, full of insights into how modern finance systems really work, how they transform businesses.
Absolutely.
Our source material, just so you know, comes from excerpts from the CBCFIN 2502 exam practice questions and explanations. Now, our mission here isn't to, quiz you or anything.
Definitely not. No test today.
No tests. Instead, we're pulling out the most important nuggets of wisdom, maybe some surprising facts from these questions. We want to give you a real shortcut to being, well, incredibly well-informed about these SAP financial solutions.
Whether you're prepping for a big meeting or just need to get up to speed on the field.
Or maybe you're just insanely curious about what actually makes modern finance tick. We're dissecting the knowledge inside these questions to get to the why behind the what.
Exactly. Understanding the context.
Okay, so let's kick things off. Let's talk about a huge challenge, especially for big companies. Loads of different financial systems, right? Maybe for mergers, growth.
Oh yeah, legacy systems everywhere. It can be a real mess.
So how does something like SAP Central Finance actually help pull all that together, unite those scattered records? This is where it gets really interesting.
Yeah, it's fascinating, actually. SAP Central Finance, its main job, its primary goal is to consolidate financial data. It takes data from all those multiple, maybe older systems and pulls it into one central export-and-anta system.
Okay, consolidation. Makes sense.
But the real insight, I think, isn't just the consolidation itself. It's creating that single source of financial truth.
Ah, right, the Holy Grail.
Pretty much. Imagine like the CEO asks for global profit numbers instead of waiting days while people manually stitch reports together.
Which never quite match up.
Exactly. Instead, you get instant real-time insights. And that's crucial because it lets organizations unify their reporting, get those insights without having to immediately rip and replace all their existing ERP systems.
Okay, so that's the key bit. No immediate big bang overhaul.
Right. It avoids that massive disruption that honestly often just paralyzes businesses.
So it's about getting that unified real-time picture, but without the, let's say, the pain of replacing everything straight away. That sounds like it would really change how companies approach those big, scary transformation projects, wouldn't it?
Precisely. Yeah, if you connect this to the bigger picture, SAP Central Finance, it specifically supports finance transformation projects because it enables what they call incremental migration.
Incremental migration, okay.
Yeah, meaning businesses can centralize their finance stuff gradually, maybe one department, then another, or region by region. Basically, they can modernize at their own pace. No need to risk grinding operations to a halt.
That makes so much sense. It turns finance from just reporting the past into something more strategic.
Exactly, a proactive strategic partner. It's a huge shift.
So, okay, what does this actually mean for you listening if you're looking at modernizing your own finance operations? It sounds like it's about planning for strategic, maybe phased change rather than one giant leap.
That's a great way to put it. Phased, manageable change.
Okay. So beyond just getting all the numbers in one place, finance is, fundamentally about managing the actual money and risk.
Especially today. Things are volatile.
For sure. So when we talk about protecting the company's financial health, what's a really core benefit of, say, SAP Treasury and Risk Management?
Well, SAP Treasury and Risk Management helps companies proactively get a handle on their cash flow and, crucially, financial risk. We're talking specifically about complex things like currency risk, interest rate risk.
Stuff that keeps CFOs up at night.
You bet. Think of it like a really sophisticated control tower for all your liquidity. It gives companies much, much tighter control over their treasury operations. It helps them move beyond just using spreadsheets and reacting after the fact.
Right, being proactive instead of reactive. And speaking of risk, but maybe more on the customer side, bad debt.
Right.
That can be a killer, right?
Oh, absolutely. A major drain.
So which SAP component is kind of the frontline defense there? Managing customer credit exposure, payment risk?
That would be SAP Credit Management. That system is designed specifically for that job, managing customer credit exposure and the risk of them not paying. It's just vital for safeguarding the company's finances, preventing those nasty surprises from accounts that go bad.
So it's about knowing who you can trust and maybe how much credit to extend even before you make the deal.
Exactly. Information up front.
That proactive approach sounds critical. Okay, let's shift gears slightly. Let's talk about the journey of money through the business, the financial supply chain.
Right, FSCM.
Yeah, FSCM. What are the main business challenges that SAP Financial Supply Chain Management is really designed to tackle, especially thinking about how critical cash flow is?
So FSCM really goes after two particularly, let's say, sticky challenges.
Yeah.
First, it addresses dispute management and collections automation. Now, this is huge because it helps free up cash that often gets stuck. Stuck in unresolved customer disputes, this
Right.
invoice is wrong, or just really slow collections processes. So automating that directly improves cash flow.
Gets the money in the door faster.
Exactly. And second, it really deepens the credit risk management piece we just touched on. It lets companies monitor customer credit exposure continuously, not just at the start, but throughout the relationship. Helps minimize financial losses.
So it kind of hardens your financial defenses across the board.
That's a good way to think about it, yeah.
It sounds like FSCM helps companies plug those leaks, stop bleeding cash from those little cracks in the system that maybe get overlooked.
Precisely. Those small cracks can add up to big problems.
Which I guess raises a question. If you have better, faster information here, how does that ripple out? How does it impact the whole business, not just the finance department?
Well, it's transformative.
Okay.
I mean, when you automate and optimize these processes, the finance team isn't just chasing payments anymore. They shift towards being strategic advisors. Sales can offer credit terms more confidently because they know the risk is properly managed in the background.
Okay.
And the whole organization just gets a clearer, real-time picture of the actual cash position. That means faster, more confident decisions everywhere.
Right. Confidence built on real data. Okay, now let's talk speed. Truly quick, data-driven decisions. The kind that really separate the agile companies from the ones, playing catch-up.
Yeah, speed is critical.
What capability does SAP S/4HANA Finance provide that really enables that kind of rapid decision-making?
So SAP S/4HANA Finance provides real-time financial analytics and reporting. And the key here is how it does it. It's powered by this cutting-edge in-memory technology.
In memory. What does that mean in simple terms?
It basically means the data lives in the computer's super-fast memory, the RAM, instead of on slower traditional disk drives.
Okay, so it's just faster access.
Massively faster. It
Yeah.
allows for really complex calculations and reports to run in literally seconds, not hours, not days.
Wow.
And that just fundamentally changes the speed and the quality of financial decision-making. It's the difference between driving by looking only in the rearview mirror versus having a real-time GPS map in front of you.
That's a great analogy. Really paints a picture.
Good
Okay,
job.
speed is one thing, but there's always the absolute necessity of playing by the rules, regulatory compliance.
Always critical and getting more complex all the time.
Absolutely. So how does S/4HANA Finance help businesses stay on the right side of those regulations?
Well, it supports compliance directly by providing embedded audit trails.
Embedded.
Meaning
And?
every transaction, every change is tracked automatically within the system. There's a clear, verifiable history. Plus, it offers comprehensive, standardized financial reporting tools. So this helps organizations meet all those regulatory requirements much more efficiently. It moves them away from relying on, fragmented spreadsheets or manual record keeping, or even totally separate external tools.
Giving you that clear chain of evidence if the auditors come knocking.
Exactly. Invaluable during an audit.
Okay, let's think about bigger companies again. Global operations, lots of subsidiaries, different entities.
Yeah, consolidation nightmares.
Right. Consolidating all their finances can be just a massive headache. Often takes months after the period ends.
The dreaded close process.
So what's a core feature of SAP group reporting that specifically tackles that challenge?
SAP group reporting is, it's pretty much a game changer for that. It allows for real-time financial consolidation across all those multiple entities.
Real-time consolidation. Seriously.
Yes. Regardless of where they are, what local accounting standards they use, it pulls it all together instantly.
Wow. So it's not just streamlining the reporting.
No, it's much more than that. It provides an immediate, unified view of the entire corporate financial performance. Leaders can actually react to trends as they happen, not, 3 months later when the reports are finally done.
That's huge for agility.
Massive.
Okay, and speaking of efficiency and centralization, what about shared services models?
Yes. Very common strategy now.
Where you have one central team handling things like, say, accounts payable or the general ledger for multiple business units to save costs and get consistent.
Economies of scale, standardized processes. Yeah.
Is there an SAP solution that specifically supports that kind of model for finance processes?
Yes, there is. That would be the SAP Shared Service Framework for Finance.
Okay.
It's specifically designed to support those shared services models. It helps centralize those finance processes that are often duplicated all over the place.
Makes sense.
And the result is, well, better overall efficiency, definitely significant cost savings through those economies of scale, and it also helps ensure consistent processes and usually higher quality service delivery back to the business units.
So it's about doing more with less, but also doing it smarter, more consistently.
Exactly. Smarter, not just cheaper.
Okay, so we've just walked through several really powerful SAP solutions, each one doing pretty incredible things on its own, right?
Oh.
Treasury, credit, FSCM, S/4HANA finance, group reporting, shared services.
A lot of capability there.
Definitely. But what happens when these are integrated? When they all talk to each other? What are the key advantages compared to just having, a bunch of separate best-of-breed standalone systems? What's the ultimate big picture here?
Yeah, that integration piece, its power really can't be overstated. It's fundamental to the SAP philosophy, actually. Well, SAP's integrated financial solutions ensure, first off, unified master data, meaning things like customer names, product codes, vendor details. They're consistent across all the connected systems.
Yeah.
You don't have 5 different versions of the same customer record causing chaos.
Ah, the single version of the truth again, but for data points.
Exactly. And that, combined with real-time process integration, well, it leads directly to much faster, much more consistent, and ultimately more accurate financial reporting compared to trying to glue together disparate siloed systems.
Can you give an example of that process integration?
Sure. Think about a single customer order. In an integrated system, that order can flow seamlessly right from the sales system through inventory management into billing and then correctly hit revenue recognition and finance, all without manual handoffs or painful reconciliation efforts between departments.
Okay, I see. It just flows.
It just flows.
So it's really not just about what each individual system does, but how they truly communicate and act like one cohesive financial brain for the company.
That's a really good way to put it. One brain.
Giving you that truly comprehensive and crucially, utterly current view of your entire financial world, that really does sound like a profound difference in how finance can operate.
It is a fundamental shift.
Okay, so here's a final thought to leave you with. Imagine a world, your world perhaps, where every single financial decision you need to make isn't just informed by data from last month or last week or even yesterday.
By insights from this very moment.
Exactly. With all your systems truly singing from the same hymn sheet in real time, what might that capability actually mean for a company's agility, especially in a market that changes so fast? What could it mean for its long-term strategy?
And maybe even, what does it mean for the evolving role of finance professionals themselves in the future? More strategic, less transactional.
Something to think about.